All right, good morning. It's October 28th, 2025, and we're about an hour away from market open. This is yesterday, so this was just went into replay mode in TradingView because I just wanted to talk about how we did our pre-market prep and how accurate the pre-market prep was yesterday. So it was a good day in terms of using this approach for determining how the structure for the RDR session is going to turn out. If you didn't watch yesterday, you really need to go back. I lay down a lot of fundamental concepts here, a lot of really kind of explanation about how I go about doing my pre-market prep, how I use data and statistics and probabilities to find market structures, directionality, timing, and those kinds of things. So it's really important to go back and look at yesterday's. This may not make a lot of sense today, and I'm not going to do as much kind of deeper training and education. But what we did do yesterday is we kind of broke down the ADR session. So this is the ADR session. This is the ODR session. There's a relationship between these sessions. There's a statistical relationship between these sessions. And so that statistical relationship is something that we can quantify and we can look at. And then we can use this relationship to determine, well, okay, now there's a relationship between these two session periods. There's also a relationship between the ODR session and the RDR session, which is our US session, which opens at 9:30. And yesterday, what we said was we're going to form what's called a range expansion. I go through all the different model types. And a range expansion is in the first hour of the US Open, it's going to have a DR IDR zone. Okay, so that's our first hour zone is going to get created that will span the entire ODR zone as a whole. Okay, so the first hour is just going to span this whole thing. It's called a range expansion. We're expanding the range that occurred from the prior session. And so our data showed us that this was the highest probability, that it doesn't always work out this way. I think NQ did not work out according to our probabilities, but ES actually did. If we come back and take a look at our, come over here and take a look at our actual video. So this was the live session from yesterday. You can see I drew this on here. You can go back to around 1450. And that's when I actually kind of pull out the data and explain exactly what I expect to have happen, which is this kind of formation. So we're either going down and then back up, or we're going up and back down. It's one of those two things. Okay. So I think in this case, I think I was looking down first and then up. So that was our day yesterday, which was good. So we had a very accurate reading of the data yesterday, which was really great. So let's take a look at today. So this is the tool that we use called the Transition Explorer. It's a tool I built. It's got 17 years worth of data, some machine learning statistics. It's got a bunch of other stuff in here that I'm not going to go into. It helps me throughout the day in terms of where price is going to go after the RDR session forms. So after that first hour, then this will help me to kind of understand where it might go the rest of the day. Okay, so some important ones here are, the confirmation. So, at what point do we break out of the RDR range, and which side are we expected to go long or short? And then are we expected to form a new high during the RDR session, a new low, or sometimes both? Will we take out both the high and low from both the combination ADR ODR session? All right, so let's just take a look at this. It's actually let me do this here really quick. Let me come off of here. Let's go out of. We're going to delete our chart. We're going to go out of replay mode, and we're going to kind of take a look at what's going on. Okay, so this was yesterday. Obviously, we can come back and see this is what happened yesterday. Get this beautiful range expansion. We went down. It looks like we went up and then we kind of didn't form the bottom until down here. which was really interesting. So we kind of had this range expansion here, and then we kind of went up the rest of the day. Okay, so what are we going to do today? Let's take a look. I also have to say that you should be aware of any news events that are coming up, because those things can significantly impact what happens from a data perspective. So if we come back and take a look at news, there's not a lot on the news. There's the Richmond, manufacturing index, but the really, really big news is tomorrow. So we do have the Fed rate tomorrow and the Fed statement. So they're expected to drop rates. So really, we're probably going to be in a little bit more of a weird holding pattern, or maybe some weirdness that could come into the market, because we got some big players that will be pre-positioning for that. So this works. This stuff, when we're talking about statistics and probability, it works because we have an algorithmically run market. And if those algorithms are, either out of sync, or they're being interrupted by large players coming in, big banks, big players putting on, their big positions, then the market's not really operating in a normal fashion, right? So that's why news events and other big events can actually create a little bit of havoc with the way that we read the market here. But let's just take a look. So ADR session was up completely above, or ODR session was completely below the ADR session. So if you remember from yesterday, what we talked about, this pattern, this relationship here is called downside X plus, DXP. So we have a DXP condition from ADR to ODR. And we talked about confirmation, which is after the first hour, which side do we break out of? That's called confirmation. Okay. So we actually have our confirmation here. So we talked about this. This is a short confirmation, but it failed. It failed to continue to go down, because we also have a move back up above. Okay, so we closed above. So we closed below first, and then we closed above. Wicks don't really matter so much, but we closed down, and then we closed above, and we kind of gone up. So we have a downside X plus condition, short confirmation, false day. Okay, so let's just see what our data tells us here. We'll come back here to our data. It's Tuesday. We had a downside X plus condition, short confirmation, false day. Okay. So basically it's a day where I sit and wait. So you can see here you could still kind of lean on, we have two different approaches from our statistics, by the way. So let me just tell you why we kind of have a difference here. This is a very predictive machine learning approach. Okay. So these are models that have been trained on the data. Okay. This is using the actual data and telling me that in the past 17 years, 27% or 28 of the times we've had an upside X plus model, and 24% of the time we've had an RX model, a range expansion. Okay, so what it's saying is your highest probabilities of what's going to happen during the RDR session are something that looks like this. Okay, so this is our upside X plus, or something that's going to look like this. Okay, and the implication for me from a trading perspective, it's going to be a little bit hard because they're really close in terms of 28 and 24. I'm going to be watching very closely this level right here. So this is called my IDR level. So this is the dotted line here is IDR level. This is the DR level. This is the midline. Okay, so I'm going to be watching this level here, because if we kind of come below here and close below, we're most likely going to get a complete range expansion. Okay, that's most likely what's going to happen. How do I know that? I can come back into my data, and let's say that we open above. This is called an IDR breach, and we now go up to 40% here, 48% here in our model. All right, so I know that becomes a very important level for me to watch as to what's going to happen. Now, if we kind of just don't really do that, if we just kind of come and do something like this, then we're definitely going to be looking for maybe this. We don't know when this might break though, right? And that's a little bit of the challenge. So what this, for me, the implication is I can lean on this data. I can look for opportunities to go long until I recognize some opportunities to go short. So I may wait until this gets broken. I might find an opportunity where it really looks, I've got other levels on here you can't see on the chart, but it looks very much like it's going to break and kind of go down. Could be rejecting off of a major level, right? So there's other factors that I can look at to know whether I should be looking for more short or more up. Okay, we're at all-time highs. Those are important factors. We're at all-time highs. We're kind of close to the 7,000 mark, which is probably a really important psychological level. We have the Fed rate tomorrow. So there's all kinds of other stuff that's going on as well, just to keep aware of. But that's what our data looks like right now. Is it's either going to look like this, or it's going to look like this right here. One of those. And these boxes aren't to scale. So I have other metrics and data that tells me what these boxes would look like from a scale perspective, but these are just visual representations of generally what the market is expected to do for the first hour of the morning. Okay. So that's ES. We can also use this on NQ. Haven't even looked at NQ. Actually, let me just come here and just change this to NQ. Let me delete some things, clean it up. Actually, NQ would be very similar. I wonder if we should look at GC1. I've been trading GC a lot lately. It's just been super volatile. ATR on it's been really big. All right, so this is a pretty, I don't even have to look at the data on this. This is going to be a downside X plus, right? But again, the fact that we've come all the way up here, breaking this level right here is going to be important. Let me show you what I mean. Let's come in here, reset. We're going to go GC. It's Tuesday. Downside X plus, short, true. So really strong downside X plus. If we break this, that's when everything goes haywire. I'll do this, right? We get like almost anything can happen. Downside's going to be the dominant one. Okay, so downside is this one that looks more like this. Okay, it's got to be above the midline. So this is a downside model that looks like this. If this breaks right here, this did not break. We wicked above, but we could not break this level. So this is still holding for now, as we can expect. But if this breaks, then we're looking at something like this. We could be looking potentially at this. If we come back over here, we say, okay, what if the midline breaks too? We're still downside. So downside's really strong for today in the actual number. Okay, the model, the machine learning model is telling me range expansion, so I could expect that as well. Okay, so there's gold. Let's get rid of that. We can do crude. We've got crude oil. Crude oil data here. This one's a lot uglier. So this is a downside model, short, true so far. So if we come here and take a look, reset, crude, Tuesday, downside, short, true. And I'm jumping through really quick. So DXP is our dominant model here. 60%, 41% there on the machine learning model. And so what we do expect here with this, unless we breach this, remember, and it has to be after the 8:30 time period. So these did come up after 8:30. If we breach this level right here, it changes. But until then, we are still looking at a downside model. That's the wrong tool. It's this tool. We're still looking at a downside model that looks like this. Going down. And I have some other major levels down here, so it looks like it's going to run toward those. All right, so that's our pre-market prep for today. We covered a few. Take a look at ES. ES is going to be a little bit mixed today, so we'll see. It's completely not unexpected with the Fed rate decision tomorrow. So we'll see what we get. All right. Have a great